Hi, in this video I'm going to be discussing trading the news. Now the news has come into my videos every morning recently because we're either sitting waiting for one key news event or another. Now of course often the markets leading into these events can go quite choppy and quiet and consolidated. When the news events come out, then we can trade again, and what I'm looking at here is potentially giving you an idea of how you might decide to trade from these events. So, and what you need to look at, of course. Firstly, of course, why bother trading the news? A lot of people would just poo-poo the idea and just say, well, wait until the news has come out. That is fine. If you don't like trading around the news, don't trade around the news. Trading around the news are some things that are just, or some news events are just almost impossible. When there's speakers, FOMC meeting for example, you get the statement coming out, that's great, we can trade that, it's a fixed data and it's there, we're fine. As soon as the speaker comes out, well, it's more difficult to trade the news. You can, yes, sure, you can follow what he's saying and take action from that, that's fine. If you're a scalper, that will work well, but if you're into bigger, longer term positions, then you might want to stay clear of it. But well, I thought, to be fair though, I would look at well, why bother trading news? And recently, let me just click on here, Darwin X. I've been talking about Darwin X quite a bit recently, and I was looking at why this is the top performer of all of the traders at the time. He's got just short of 34 million under management now, and building and building. Every time I look back, it's ticking on some more. And I listened to a video of his where he discussed what he's actually trading. And he's trading the news. So if you want an idea of why bother, well, he's done what, 700-800% in 9 years there with the money. Is building it up, and he's trading specifically news. He uses a particular method, and it's not just him; it's him and his team. So he's got other people that work with him. So you've got to work this out. You need your little team, effectively, which possibly leads me. Well, where do you find the news? There's so many brokers. Nearly every broker now will give you some news feed. The speed of it is different depending on the broker. There are some particular news-based squawk type news services. I actually use one called Financial Juice. Let me just show you. In fact, at the moment they got an absolutely fantastic deal, so I have put a link down the bottom. Let me just show you Financial Juice. This I just wound it back actually, but this system, Financial Juice, and this is the pro version here. What this is, it's, well, firstly, what's it cost? Because it does go with a cost. Now, I was using something that was costing me $250 a month, basically, a news service, and I just cancelled it altogether. I opted and looked around, and I found one. Well, this was $99 a month, or $118 a year, basically. Sorry, $1,118 a year. But they're currently offering unbelievable offer here, a New Year's deal, which we're in February. I should watch out. It's probably not going to last a lot longer, but it's $99 for the full year. It's a no-brainer, and they'll give you a 30-day money-back guarantee. If you don't like it, you could just bang it back. But it's I'll put some details below the video here. But it's brilliant because it gives you, if you want it, and you see the top here, it's got real time. You can actually hear someone talking. So if you're sitting there, I mean, I don't trade right the way through the whole day. I'll trade at different points. If you're wanting to trade a bit of news, I'm not around. You can click on here and listen to someone, and they'll talk you through what's happening and give you a lot more detail. So you can actually trade the news with them. Basically, that you get little things coming up on the left hand side. Sometimes you might see it in the morning, it pops up, trade the news with us this afternoon, FOMC news or whatever else it may be, but you can actually trade the news with them. So anyway, it's a bargain, but this is where you find it. It gives you news. This is, as I say, pro version. It's out almost instantaneously on here. They are one of the fastest producers, I think, of 70% of the on here. What was it? Something, I can't remember. I noticed a stat on their site there. They're faster than 70% basically of the other companies out there. So on most news, so their news service is very, very quick. And when you're trading something like, for example, non-farm payrolls here, or something similar, where you just need to see the numbers very quickly to see whether it's a go with and stay with, or whether it's just a take the money, you can make your decisions accordingly, because you get the news out there very, very quickly. And the news just comes through. You can click on different events, whatever you want to. If you want to read further, you can actually also on this news, I've got it filtered down. I don't want any other news events on it. I only want theirs. But you can actually there's a filter up here, and you can put the times and impact in it. But there's close that. And there's other aspects that you can change. Where is it? Oh, actually, it's here. Look, Forex. You can go in here. You can go into My News and go and click on it. You can have all the other providers of news firing away there. So there you go. Plenty of different versions. Anyway, there's news. So that's where you can find it. That's probably the best version. What to watch. Now, what I'm going to do here is just run through a few things, give you a bit of background of what to watch. I'll give you a list. This is a slightly older slideshow, so when I put low interest rates, just bear with me, it's interest rates. So here we go. So low interest rates, a key aspect of what drives economies. High interest rates slows economies down. Low interest rates boosts economies. So we had long periods of low interest rates through COVID, through the financial crisis, etc. So we had that amazingly long period of very low interest rates. The interest rates we got now, by the way, are just normal interest rates, although the average in the UK was about 7%. So we're still well below average, but either way, higher interest rates really affect the market. Lower interest rates obviously also can affect it positively in terms of investment. For example, the lower interest rates, the cheaper it is to invest, and then investment creates growth creates jobs creates demand. As people start buying things, you get consumers buying, and too much of that and you get inflation. All that feeds into this little picture I've got here. So basically your GDP, your gross domestic product, which is the key figure to be looking at for a country's growth, is obviously very key. Gets fed into central bank decisions, as of course inflation. High inflation, when we've seen inflation in 10% and things like this, it's not where the central banks want us to hold it, because it's not sustainable. It has a real bad effect on the value of currencies. Look at Zimbabwe. God knows what percent interest rate inflation they've got there now, but it's horrendous. Anyway, it has a very hard effect on their employment. Now all of these have numbers that we can read and look at. For example, well, the central banks like the FOMC, we saw that on Wednesday. We got Bank of England, we saw on Thursday. GDP, we could see those out. Some of them are now being delivered on a monthly basis, but generally you want the advanced figure or the quarterly figure. Is where they put it out on a monthly basis. They'll occasionally put out a quarterly figure, and the quarterly figure is much more important than the monthly figure. The idea is to putting it out monthly, it waters it down basically, but people still like to compare. They're old-fashioned, they like quarterlies. Anyway, inflation, this is often the main reader of this is the CPI, the Consumer Price Index, and there we're looking particularly at the core, but there's a lot of data that sits behind the inflation figures that people will read. Just as there is with the GDP, there's the PPE and things like this, all inflation figures that the Fed will use. Employment, of course, we saw this on Friday, massive movement there on the non-farms. We're looking at things such as wage inflation, of course, the number of jobs that are new jobs, and of course the unemployment rate overall, but it's really wage inflation and new jobs that are created. You've got the PMI, production and service, most important services, both flash figures that we should be looking at, and these are the sort of the key things it should be looking at. Retail sales, the core figures there, and of course speakers are harder to determine anything. Even when any data first comes out, it's easy to trade a bit of data. To trade what the speaker's saying is often more difficult, particularly with something like the FOMC, because in one mouthful they can say, well, they can be quite hawkish and bullish on the currency, and next minute it can be however, and then it all goes the other way, and the markets are flying all over the place. So they're the news events. Now the impact, of course, crosses onto the markets themselves. We can look at a little bit of that from Friday. If I got wrong figure, let's just escape from here. There we go. Friday then. So there's Friday's news that came out. This is on a 15-minute chart, but you can see traders. We'll take it back to Wednesday. FOMC came out there at 7 o'clock. That was the release. However, we had a speaker. Look what happened at the beginning. Actually, on the beginning of the speech, we actually saw this is the euro dollar. We saw the euro gain, so the dollar weakening, and then suddenly the dollar taking strength, gaining strength. Wasn't really believed though. Look at it. Next day, Thursday, it ended up pushing up, and traders were, I don't know if they were positioning themselves. They may have been positioning themselves, but bearing in mind we had that horrible. I talk about employment. Ignore the ADP largely, although be aware when it's coming out. The ADP non-farms is a complete useless bit of data, and it's proved itself again that it's rubbish this week. Anyway, finally it's pushing up. The important thing, the other thing before, if you've got news events coming out, the market will go consolidated. We saw this here on Friday. And it never fails to surprise me. Someone comes into my trading room in the morning and says, "Cool, what caused that then?" Why don't you look at the news first thing? Anyway, I do that. So if you want to catch the key news on any day, you can catch me live in the morning, 7:45 in my trading room, but 7:45 on the YouTube live video goes out every morning at 7:45, and you'll catch the sort of key news events that I'm looking at. It's a key thing I do every morning, is to look at what's coming out in the day ahead or the few days ahead sometimes. Anyway, so trading beforehand is quite dangerous. Trading when the event, this was a solid number, so there's no speaker to go with it, and boom, out it's gone, and it's rolled over. Expectation wise, why did it happen like that? Let's just give you a picture. The reason was the data was a lot better than expected, and it all comes back to interest rate expectations. And I'm just looking at the CME group page here, and the 24th of March, it was originally, if you can go back here, you can see the probability previously of the rate being cut, it was 62% of traders believing it would be cut to at least 5% from the current level. Now that's down to 38%. In fact, on Friday it was sitting there at 20%. So that's why that's why this has happened. Traders have got ahead of themselves too much, expecting quick cuts. The Fed made it clear on Wednesday that it's not going to. So this is all priced in. So can you trade it? Well, of course you can trade it. You can trade parts of it. In fact, if you sign up on that with Financial Due, so I'll make sure you get, if you just send me an email, kim@thepivottrader.com, I will send you a method, 5 different methods of trading non-farms, for example, on a video, or the clip to the video. So there you go. Right, that's pretty much it for me on news. It's very, very important. Even if you don't trade it, there are plenty of opportunities to jump on the bandwagon and trade some of this. So I'll leave it to you for now. So if you want to sign up on that link, let me know if you have, and send me an email, and I'll send you a link to a video on trading the non-farm payrolls. Right, leave it there. Have a great day. Take care. Bye for now.